So the purpose of today's presentation is really for me to share with you the update on our transformation program, and I'll try and do this in pretty much the same terms I did. I think it was only a fortnight ago we had our annual general meeting in this room doing that. I'll give you a little bit of background and context. I then want to talk about our vision of regional preeminence, talk about the progress we made in the most recent financial year and our priorities for this year, and then really summarise our group strategy for you. So, well, just to set the background and context, really for me, a lot of this started in early 2009 when I took up the position as Chief Executive, and with a very clear mandate from the board to lead a transformation of this company and to discover the potential of the trust company. We commenced the strategic review in April 2009. In October of that year, we announced our vision of preeminence as a professional trustee. And then there was a period of work after October through until June the following year where we really developed the strategic work program. We did a lot of work, many of you will remember, internally on the ethical framework. We also focused on our brand values, and importantly, we developed the new visual identity, which we rolled out in June 2010. And then, of course, the other big thing that's happened along the way is that in March of 2011, we completed the acquisition of Guardian Trust, and a lot of what we've been doing over the last 12 months has really been about making sure we consolidated the merger of those two companies. Let's remember the climate against which we've done that in terms of the broader environment. The decline in investor confidence post the global financial crisis has been the marked backdrop to against which all of this has been done. We've seen continuing capital market volatility with shares up one day and down the next, but generally on the overall they've been down. Not a week goes by without there being some development out of Europe, because all the banks there and the governments in Europe really are facing a very significant debt crisis which has been building for many, many years. And at the same time, we've seen the internet increasingly causing disruption to established business models. You've seen that particularly here in Australia with the impact on the media and the press, particularly Fairfax and News Corp over the last few weeks. But it's true right across. If you look at all the online retailing that's happening in Australia and New Zealand compared with a few years ago, you can see how the internet is now really disrupting some very well-established business models. So against all of that, and some of you I'm sure even here at the Trust Company will be saying this about, well, if things really changing, we can't see much that's different. I just wanted to, or it's taking a lot longer, John, than you said it would. I just want to remind you of a quote from Bill Gates, which I've set out at the bottom of slide 3. And it's a very profound observation. He says, we always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10. And then he observes, then he says, don't let yourself be lulled into inaction. So some of you may feel that this is happening slowly because you haven't seen much happen over the last 2 years. Doesn't mean that actually things aren't happening, because it might be creeping up on you a little. So watch out for that trend. And I'll talk through in a moment what we're trying to achieve around market positioning, our clients and services, our people and our facilities, systems and processes. But very importantly, we should keep in mind our shareholders, because this will drive top quartile financial returns, so we will achieve strong organic growth, revenue growth. We'll get our operating ratio, and I'll come back and explain that a little bit later on, at or below 65%, and we will have consistent growth in shareholder dividends. We want to have a distinctive and vibrant market position as a leader and innovator. We've dropped the word bold as such, but we do really want it, because some people thought, not quite what you want a trustee to be, but we do want to have a distinctive and vibrant, strong and lively market position and be seen as a leader in our space. We will be a thought leader on key issues such as transparency, governance, cross-border investment, regional capital markets and positive ageing. And we will lead the philanthropic space through our engaged philanthropy. Our measure of success here will be to increase our brand awareness by 300%, which is 4 times. Now, to be honest, when I set that ambition, it was before I'd seen some recent name and brand recognition survey results that Jo and her team had shared with me. And if I was a bit worried about 300%, I think it probably needs to be more like 500 or 1,000%, because our name is still not that well known or not that well recognised, which is why the opportunities that are coming to us through the Miles Franklin, where we increased the press coverage and the number of mentions of our name by over 2,000%, the proactive media we're getting around the MIT changes, and I should just acknowledge the great work the corporate team, particularly Andrew Kinane, have done there. Things like the infrastructure breakfast we had here a couple of weeks ago. Things like in New Zealand, the Rose Hellaby Award we're using, which is in August. We're going to use that scholarship award as the commencement of a campaign in the philanthropic space in New Zealand, just in the same way we've done Miles Franklin. And then the last example I wanted to call out, and I hope Chris Blinko is listening in, because I want to just really acknowledge and thank Chris. Very simple little things. But Chris was who's for those of you who don't know him, he's our philanthropy manager in New Zealand. Chris had attended a seminar on a trust that we sponsor called the Springboard Trust, which is a trust focused on disadvantaged and young child education in New Zealand. Just happened the Springboard Trust had been set up by some then partners of McKinsey, one of whom was back that day leading the seminar, and that former McKinsey partner happens to be Ian Narev, the Chief Executive of the Commonwealth Bank, arguably Australia's largest and most powerful financial institution. So Chris very humbly but directly went and introduced himself to Ian, talked about the work we do in New Zealand, supporting various charities over there, and then also mentioned our engaged philanthropy and asked whether Ian would appreciate the opportunity of being introduced to me. Chris then followed up on that with just a very simple little email telling me the story and saying, you should be getting in touch with Ian. It just happened that a day or two later, I happened to be participating in the CEO Sleep Out here in Sydney, where Ian was the chief fundraiser. And so I went over at one stage during the evening and introduced myself, congratulated him, and made the link back to his conversation with Chris. And if you could have seen the way Ian Narev's eyes lit up when I made that connection, I think, and so it's just a wonderful little bit of teamwork on Chris's part, sharing that relationship with me. I think I'm going to see Ian later this week or next week to really talk about what we're doing in the engaged philanthropy space and how the Commonwealth Bank might like to work with us. So it's just very simple, those very little simple things. So we'll get a little bit of brand recognition in one space of the Commonwealth Bank, but more seriously, that opportunity to go and see the Chief Executive of the Commonwealth Bank doesn't come that easily, but came very simply through great work from Chris's part. So thank you, Chris. Moving on to clients and services, our clients will be highly satisfied with our service and advocates for our company. And that's the thing I'm going to come back time and time again, is client advocacy. Doing such a good job for the clients that they give us the referrals, they give us the word of mouth. And if you think about it, you get the brand recognition up, so people are saying, oh, the trust company, what do they do? And then you get, oh no, well actually they look after my affairs, I'd really recommend them. That's the combination that we really are going for here. We will have enduring relationships with both clients and their families. We will have a specialised offering to the retiree market, because that's really the target market for our personal business. We'll have a high quality corporate client base, including major international investors like Canadian Pension Plan Investment Board that just put down a cool $1 billion to fund Barangaroo. We will have the specialist corporate trustee services across a number of asset classes. And our measure of success here is, coming back to this client advocacy, is our Net Promoter Score being above the high performance norms for financial services and personal wealth sectors. And what do I mean by Net Promoter Scores? We will be doing regular client surveys on personal and corporate. We'll simply ask them the question, would you recommend the trust company and guardian to a friend or colleague to do work for you? Agree, disagree, and really the people that give you the high scores, I think it's 7, 8, 9 or 10, they're promoters. You take out the people in the middle. The people that give you 4 and below are your detractors, and you want to measure the net, how many net promoters you've got. It's a very simple measure, and it'll be coming our way very soon. We have already done it a little bit, but we'll be doing it on a very regular basis. There are some little examples I want to just call out here again of achievements we're already making. Those client satisfaction measures will be coming. It was a pleasure for me last week to be able to acknowledge the great work the personal team did here in Australia, or particularly here in Sydney, in relation to Gunnar Pearce's diary. It was a great piece of teamwork all the way through. Excellent client service from Pam and Caroline looking after Mary Pearce when she died. Great work by Tim and Anya going out and actually locating and identifying this diary. And then great work particularly by Anya on following up from that, organising the relationship with the state library, getting the relatives of Mary Pearce and Gunnar Pearce in for that occasion, and then fantastic work from the marketing and PR team with Joe and Anne-Marie to capitalise on that. And goodness knows how much press coverage and media coverage we got on that, and the number of different people who've talked to me about having seen us in that context. But if it's all about getting brand recognition up, I want to now talk about what we will achieve on people. We will have highly skilled people who are highly skilled at anticipating client needs and viewed by our clients as trusted advisors. Our staff will be confident in generating new business through referrals from existing clients. We will be a learning organisation and an employer of choice, where people choose to work with us and enhance their skills and develop their careers. And we will provide a working environment for you which enables you to achieve your potential in a balanced way. Our measure of success here will be the employee engagement and employee enablement scores. Importantly, we will need to roll out and are rolling out the KPIs across the organisation aligned to group strategy. The people and development and marketing and comms team are well progressed on developing an onboarding induction program, which you've given us feedback about that we need to have. The volunteer days program is being rolled out across the group. It's very simple, but our focus on your well-being, providing fruit in our offices, and then an approach really amongst our people of developing the best of the best. I'll come back in terms of our approach to solving things, because it's really about expertise, and it's really developing your expertise, which in turn develops the company's expertise, is critical. And it's been fascinating to watch the work of the people involved in the BSR program as they share their ways of doing things across the organisation, and we identify and develop the best ways of doing it. And then the importance of moving people around amongst our people. So Catherine Dixon particularly, who moved from Auckland across to Melbourne, building the links there. Mariam Ahmed, who moved from Singapore down to Perth, just building the relationships there. And our SMEs, or subject matter experts, who've been playing a major role in our work on the business systems or solutions refresh and upgrade, and them moving around as they've gone around on the testing. Getting to know each other has been critical. On our facilities, systems and processes, our vision is to have integrated web-based systems right across the group. All our systems will be upgraded and capable of further multi-jurisdictional expansion, because much as we like Singapore, over the medium term we would have aspirations to establishing a presence in Hong Kong. And so that ability to go into other jurisdictions is critical in the upgrade. And our processes, using the systems upgrade as an opportunity to rationalise our processes and make them simpler, more efficient and more focused on client service. Our measure of success, I said I'd come back to this, is improving our operating ratio by 10 percentile points. What is our operating ratio? Our operating ratio is simply all operating expenses divided by our operating revenue. It's a very simple measure. It's one that applies at the whole group, and then you can actually apply it in a slightly modified fashion down into the different areas of business. We're developing those stats. I could quote some of it, but until we break it down and make it meaningful in your area, it will be hard for you to really grasp how you can improve it. But very simply, you improve the operating revenue by, if any of you remember your maths, you reduce the denominator, and well, we actually want it to go down. So what we want to do is get expenses down and revenue up is the simple way of achieving it. So simple little things like catching the train to the airport or the bus into Melbourne from the airport takes expenses down, and revenue up is through great client service and cross-selling and bringing in more clients. Examples of what we've achieved so far on the systems side, we're now totally separated on the IT side from Suncorp in New Zealand. New Zealand itself is now set up on cloud-based technology. We've put a new phone system into Auckland and a new network systems to support the 14 locations over in New Zealand. Video conferencing and voice over the internet's been rolled out right across the Australian and Singapore network. We are doing that to Auckland at the moment, and we will in due course spread that to the rest of New Zealand. Importantly, in the last 12 months, we established new offices in Christchurch. The team there had to put up with very unsatisfactory interim accommodation because of the earthquake. And as the team in Brisbane knows, that's the next office schedule for an upgrade. We'll be selling our current premises in Brisbane, moving the office to a more professional environment in the city. To move on to group strategy, the strategy really in 5 parts. We want to, as I said, create and reinforce a distinctive and vibrant market position. We want to grow through client advocacy. We want to develop you as our high-performing team. We want to increase and improve our systems and processes, and we want to focus on financial discipline. They are the 5 overarching strategies that we are driving. And how does that really come through in terms of a group level, what our operating priorities are for the year ahead of us? We have three key priorities. One is engaging with our clients. The second is about transforming our business. And the third is about empowering our teams. So engaging with our clients, developing the client contact programs, and measuring the client satisfaction in a regular and consistent way across the group. In transforming our business, the 2 big initiatives are the business solutions refresh, which I'll come back to, and the work we're doing restructuring and simplifying and making consistent our investment management across the entire group. And then most importantly is empowering our teams, giving you clear aligned KPIs and incentives, and I'll talk about the incentive program in a moment, and also then managing and promoting our talent and letting you get on with things rather than waiting to be told. Moving on just quickly in terms of priorities, and what I'd like to do is ask you to read these later, but also discuss them with your manager, because you really need now to be picking up on the priorities that are relevant to your part of the business. I've gone through at a high level our priorities on the personal side of engaging with our clients, where we're picking up the number of seminars as we are doing in New Zealand. We'll be developing a will mining program where we more actively manage the will banks in both countries. We want to develop the group referral program to encourage that word of mouth referral. We similarly increase growth through business development, through the work our business development managers are doing, and then transforming our business. We've talked about investment management. We've talked about increasing and the achievement we have in terms of authorised advisors in New Zealand, and then embedding those KPIs and new revenue targets with our staff. Now, what I want all the people in the personal business to do is actually take up a discussion about those priorities with your manager. We had a management team briefing last week, where we went through this, and they all gave me their assurance that they were ready to do it. But more seriously, the conversation you have with your manager around those priorities and how that works into your performance plan is critical. Similarly with corporate, our priorities around engagement with our client, the client satisfaction surveys, looking for opportunity to extend our services along the value chain with our corporate clients, refining our pricing strategy, looking to complete the integrated management across all aspects of corporate, and we have the trustee relicensing in New Zealand, and then a refocus on superannuation and the Kiwi Saver trustee services to meet market and regulator expectations. And then increasing our profile in corporate. So again, what I want those of you on the corporate team to be doing both in Australia and New Zealand is discuss what that means for you with your manager and make sure it's reflected in your priorities and KPIs in your performance plan. In terms of empowering our people, we have, as you know, implemented the organisational review, which is an ongoing process, and there are elements of that that will be further announced at the end of the month. We have got the performance management framework in place, and you should be developing, if you haven't developed already, your KPIs consistent with the group priorities and the priorities for your area. We're aiming to have those completed by the end of this month, and we need to ensure that they're aligned through the 2-up manager sign-off. We're developing our talent management and succession planning next quarter. We'll be picking up on that again. I've got very clear feedback from you that you want us to improve our communications with you, so we will be increasing that coming from me and from your managers, and I'm going to be getting around and having more informal sessions with smaller groups where you get the opportunity to ask me questions or explain things in your area. I mentioned earlier the biannual, i.e. every 6-month engagement and pulse surveys to track our progress. So the next engagement survey will be coming in September, and I'm really looking forward to your feedback there. And then we've enhanced our incentive programs. We've had a lot of feedback from you in relation to our incentive programs, so we have effectively split them in two. The short-term incentive program that those of you in Australia will be familiar with will now only be limited in its operation, so the executive, general managers, heads of and other key roles only will participate in that session. It remains a reward for superior performance only. It is based on the existing short-term scheme with the 2 tranches effectively spread over 24 months with the split between cash and performance rights, and it's linked through to the performance plan. Now, many of you said that that was too complex and too drawn out. So to simplify things and make the process easier for the vast majority of people under the general team program, which again will reward superior performance and will apply to about 85% of staff right across the group. I guess the 3 key changes for people are it will all be paid in the year that it's earned. There'll be no deferral. The second is it'll be 100% in cash. And the third is it'll be linked to the performance plan. You won't need to set short-term objectives. So if you step back and look at what we've done here, the STI program has been simplified in that the short-term objectives are taken effectively straight off the performance plan rather than through a separate process. Otherwise, for those people in those roles, it remains basically the same. For everyone else, the big changes are it's all in cash, it's all paid in the year of income, and it's again linked straight to the performance plan. So what we've tried to do is make it simpler and easier to operate and more immediate in its impact for you. It will be available to all eligible employees right across the group in both Australia, New Zealand and Singapore. It's important to recognise it as an incentive. It's not an entitlement. It's for going above and beyond your day-to-day role, what's expected of you in a day-to-day role. So it's for doing something more than just doing a good job. It's excelling in some way in your service. and the company's financial threshold levels must be reached before any award is payable. Ultimately, it's at the discretion of the board, and this year there will be two parts to that measure. There will be an EBITDA growth element and there's an earnings per share element. What I can say at the end of the first quarter, that is at the end of May, we were on track to achieve those, but our actual achievement will be dependent very much on the contribution we all make between now and the end of the year, which is what you would expect in any incentive program. And in calibration sessions, when we come down through to the awards, calibration sessions will be held across the group to ensure we have a consistency of approach. And the last thing I want to cover off is the systems upgrade. As you know, we are doing a staged implementation of the systems upgrade. We're well advanced on the testing and evaluation of vendors for the first three components. That's the client relationship management system at the top of that diagram, the personal trust account administration system in the middle, and the investment management component down there at about 4 o'clock. In fact, we've now completed the testing of all three vendors, I mean to say. And I having spoken to Kathy Stevenson and John MacArthur-Stanham on Friday, I'm fairly confident we will be able to make our decisions and recommendations to the board by the end of August. And there'll be a variety of different solutions and pricing models, and it's actually quite an interesting process to make that evaluation. I won't go into that detail here, but that should be done in the next 6 weeks effectively. We're also looking at the opportunities an upgrade would give us to extend our services and revenue opportunities elsewhere. And most importantly, we're using this project to transform the way we engage with our clients, the way we work together as one team, and the way we process our work. So please don't feel, and I'll close on this. I got asked a question, which when I get to the Q&A, I'll go into more here in Sydney. How do we cope with the business systems, so business solutions refresh, and all our day job? I think the best way of seeing that is to see the business solutions refresh as part of the day job. It's an opportunity to pick up when you've got to get your files organised for data cleansing. It's an opportunity actually to get on the phone to the client and make sure everything's in together and the strength, and have that conversation with the client. The work the subject matter experts have been doing when they've gone around and looking at each other's processes, so to make sure the system or the vendors can cope with what we need, it's been a great opportunity for them to get to know each other, share their expertise, and build that best of the best approach that I was referring to earlier. So it's a very important activity for us this year. In fact, it will be an ongoing process. We're not going to complete the business solutions refresh for at least a couple of years. It will be an ongoing process as we upgrade everything we do. The best way of thinking about it is think about it as part of your day-to-day job, and think and use opportunities out of the project to advance those objectives of getting to know the clients better and getting to know each other better.